Hey everyone, welcome back to Corporate Decoder. Today we're diving into Rocky Mountain Chocolate Factory's 10K report, and it seems like things are so tough, even their chocolate is a little bittersweet this year. Get ready to see just how deep the financial fudge goes. This report paints a picture of struggles, losses, and some serious financial juggling. So we will focus on the parts of the text that showcase the problems that the company is dealing with. If you love getting the unvarnished truth from these corporate documents, make sure to subscribe. Check out our Discord community, linked in the description for even more insights and discussions. First off, Rocky Mountain Chocolate Factory is traded on the Nasdaq under the ticker symbol RMCF, so anyone can easily follow along with their price swings. Let's get right into it. This report is for the fiscal year that ended in February of 2025. That means this is a look back at the whole previous year. Now, this is not great news to start. The auditors see that there's substantial doubt about the company's ability to continue as a going concern. It means there's a real risk that the company might not be around in a year if things don't improve. One of the main reasons the accountants are worried is because it lost a substantial $6.1 million during the year. Plus, they used up $6 million in cash just to keep the business running. Making matters worse, they also violated one of the debt rules for their $6 million loan, which gives the lender the ability to demand repayment. Let's dive into some of the financial highlights, or perhaps lowlights. The total adjusted gross margin, a measure of profitability, got really bad at just 3.6% compared to 10% the year before. That shows they made a lot less money on each product they sold, a significant drop. On a brighter note, the company managed to cut some of its sales and marketing costs this year. Those expenses went down from 7.6% of total revenue to 6.7%, a small but welcome improvement. Similarly, general and administrative costs also decreased from almost 24% of total revenue to just over 21%. Cutting expenses is always a good thing for maintaining the financials. If we compare this year with last year, net cash is down over 50%, while their total assets only increased slightly. Although they sold property for $230 million and an equity raise of $222 million, their activities used cash of $1.7 million, their activities used cash of $1.7 million. To deal with having low cash, the company is depending on getting more funding. But if they don't get the capital they need, it may need to significantly cut its expenses. Also, the audit raises the spectre that the lenders can reclaim loan value from them, severely harming liquidity. If lenders were to decline to grant us a waiver and instead demand repayment, we may need to seek alternative financing to pay these obligations, as they may not have sufficient facilities or sufficient cash on hand at that time to satisfy these obligations. All problems compounding. Of course, Rocky Mountain Chocolate Factory is also facing quite a few external risks that are worth noting too. Public health outbreaks such as another pandemic could hit them hard, and of course general economic conditions could affect customers' ability to afford chocolate. They're also worried about changes to trade policies, including tariffs. Tariffs could raise the cost of their goods, which could then reduce their profits or make them have to raise prices, potentially decreasing consumption of their goods. Of course, to keep up with the times, the company has to worry about cybersecurity and protecting customer data. Despite all their efforts, data breaches could lead to lawsuits, lost customers, and reputational damaged sales, and remote work becoming more common. Like any business, at any moment the company might be faced with lawsuits relating to their day-to-day. A bad outcome in court could really hurt their operations and finances. Even if they win, the legal fees and management attention required by the lawsuit can add up. Then there's some fine print that mostly relates to company structure and related legal risks. They mention that provisions in their organizational documents make it difficult for someone to buy the company, even if it would make the shareholders richer. On top of all of that, the company admits that the stock price might swing up and down quite a bit, regardless of how well the business is actually doing. With or without tangible reasons, volatility can exist, so investors can lose money and run away. Turning the page, let's talk about what the company plans to do to dig itself out of this hole. Rocky Mountain Chocolate Factory strategy includes the highest quality chocolate that will be coming out of the factory and making sure their stores make you have a fun and enjoyable time in the store. The company wants to focus on doing everything perfectly. The key to this is to provide all the tools and support franchise locations need to improve their sales and profits. The company also wants to push for growth, opening branches in high traffic spots, but one of the things that's historically held them back is their lack of staff. The company is hoping enhance their brand strength by product offering, by marketing it to multi-unit operators looking to expand their portfolio of franchise. With all of that said, to get more in-depth information on who is on the board of directors, you can check the linked document from their website, or of course in the Discord we've linked. If you really want to see how the company operates and what its values are, go to their website on our Discord to read about that and other things. There are also discussions about labour and logistics challenges, macroeconomic inflationary trends, labour and freight, and supply chain, all contributing to higher raw material costs. Well, after looking at this SEC filing on Rocky Mountain Chocolate Factory, what did we find? It looks like Rocky Mountain Chocolate Factory has been struggling quite a bit, and we've only highlighted some points the company's had to release in public. The company is dealing with big losses, doubt about staying afloat, and lots of risks in the market. The report showcases a tough mix of losses, debt issues, and auditor warnings. That all said, the company knows it needs to focus on making each store feel super special and make sure they pump out amazing products. The management is well aware that it has an unstable company base and that it needs to fix the operations. Are they able to fix it, and what are your thoughts on it? Drop your thoughts in the comments. Make sure you're subscribed if this overview was interesting. And as always, join us in the Discord. Thank you, and until next time.